Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, Morgan McKinley Ireland recently published its 2024 salary guide. Bucking the trend of recent years, it's expected that salary increases will plateau in many sectors next year. Global FDI Director with Morgan McKinley Ireland, Trayc Keevans, joins us now to explain why. Trayc, you've been involved in foreign direct investment for the past 15 years, but what changes have occurred over that time?
Good morning, Karl. Thanks for having me on. So you're right, Karl. I've been 18 years in the wonderful world of recruitment with Morgan McKinley, and for the last 15 of those 18 years I've been involved in the foreign direct investment landscape. And I think initially we set up our advisory division to support the talent information needs of companies that were setting up here. And what we found is IDA, who do a superb job in attracting foreign direct investment into Ireland, and their execs are based out globally in various locations. They meet with companies in the first instance, and their interest is in what skills are available, not just now, but what skills are available into the future. So I think one of the bigger things that I've noticed in more recent years with foreign direct investment and companies looking at Ireland is the immediacy of which they are operating. So if I go back beyond the last 3 years, there was always, a certain time frame that you'd have to build, this information to put a property solution, for example, in place, to put banking finance. Now it's moving at a much quicker pace. You could argue technology is part to play in that, but Ireland has done such a good job for so many years, and with record levels of FDI, it's not surprising that other countries are looking to emulate Ireland's success. So there's a lot more competition internationally for FDI wins.
So on that basis, how important is it for a county like Wexford to have turnkey property solutions ready for these foreign direct investments?
I would say, Karl, it's very important. I think on the property side, there's a number of ways in which companies can come in. They can, depending on the size and scale and what they're looking to do. Or to take, let's say, an average tech company, for example, a lot of those will work remotely, so the property solution initially won't be as important. However, there is a connection piece where now we're starting to see a lot of the tech companies bringing people together for collaboration. So that's where some of the, let's say, the co-working spaces and hubs are quite important. For others where, let's say, it's customer service facing or multilingual sales, and they very much want a property solution to bring people together, to learn from each other, work together, and they feel that the energy that's derived from that in a common space is preferable to wholly working in a remote type environment. And then you have a manufacturing operation. We're working with, for example, a company at the moment that is looking at a global services location, and really for them having a scaled property that enables them to grow in the hundreds over a period not too large a time is quite important. And what generally we're starting to see is that locations tend to have a property that's let's say suitable for maybe the first 6, 8, 10 months, but then when you start looking at 12 months and beyond, and the pace at which the company may wish to grow, there can be limiting factors. So it really is those that have that turnkey property ready to go are going to be more successful in capturing that investment.
And Trayc, of course, IDA Ireland are attracting companies across a range of sectors into Ireland, from financial services, technology, business services, biopharma, medtech and the green economy. So in that respect, which sectors from your own insights are most active in looking at investment opportunities here in Ireland?
So I would say it's been a very good number of years for the life sciences sector, right across from manufacturing to R&D, and that's from med devices right through to biopharma. Biopharma investments have been very welcome and very strong, and I know Southeast has been successful in securing that also. The engineering sector, engineering skills are in high demand and premium globally. So the engineering sector has been very strong and continues to be. And then the digital sector. So it's the tech sector, albeit the big tech has had a tough time over the last 12 months and maybe not as strong as it has been. And there still has been space for other digital tech positions, particularly within the professional services and financial services spaces. They have captured a lot of the talent that was displaced in big tech, but also the ecosystem for new digital and tech companies establishing operations has been strong. And then the other would be construction. Construction's probably been one of the most under pressure sectors in terms of skills and attracting and growing skills. But certainly anybody with a career in that space would be in high demand.
Now, Morgan McKinley recently published its 2024 salary guide. So what are the key points and takeaways from that?
The Morgan McKinley salary guide, I suppose, has looked at salaries over the last number of years. And this year's salary guide, well, it's looking at more than 27,000 salaries. Unlike what we've seen in previous years where there's been significant pay increases, we're actually forecasting that there'll be little to no significant change into 2024 in salaries. We expect to mirror projected inflation rate of about 3%. Now, there will obviously be some exceptions to that for significantly in demand skills and specialised positions and industries that are facing skills shortages. And in those areas, we could see up to 15% increases in salaries.
And Tracy, why have we moved from talk of the Great Resignation in recent years to the big stay next year?
Yes, Karl. Well, in the survey this year, 36% of employees said that they planned to make a career move in the next 12 months. And that figure was more closer to 53% last year. So there's a couple of factors. I think one of them is exactly what I just spoke about, which is pay. I mean, one of the bigger motivators for somebody wanting to make a move in their career is to earn more money, and if that's taken off the table, it's going to be less attractive for somebody to make a move. And the other, I think, is around a lot of work has been done by employers to bottom out what are the benefits that employees are looking for, what is the type of work environment that they're looking for, and what's important to them. And things around career development has been very important to a lot of people. And people reflected post-COVID on the type of work that they're doing, and some have decided to make a complete career change. And what we have found is some employers are looking to do that in the first instance with the employer that they're at, because reskilling has become very much the buzzword and expected to continue into 2024, where people are ideally looking to change or pivot from what they have been trained to do or to do a version of another guise. And employers are actively supporting that because they want to retain the talent as much as possible.
How do you expect employers in Ireland to approach recruitment next year?
Well, we've already seen this year a much more cautious approach to hiring. And what I mean by that is that there's value-based hiring is what I would probably call it. So we call it the old world, or the more traditional way of hiring. If somebody left a job, the natural default of that hiring manager would be to open a new requisition and hire that position again. A vacancy left open, or the work wasn't being carried by other persons within the team, and the immediacy of how that would happen would be important. What's happening now is there's job assessments happening. So with each person that departs, that job is being assessed to see, firstly, is a replacement actually required? Is the business there to support that position continuing? Or is there a different version of that job required, and does a modification of the job requirements needed? So that has slowed down hiring considerably. So while we're talking about cautious, it's actually more pace of hiring has slowed down. So that immediate trigger reaction to hiring has now slowed in favour of actually assessing, is the job in its current format merited and warranted, or does it need to be modified, or is it needed at all? Or has the business doing well enough to support the rehire of that position, or is this an opportunity now to without having to make anybody redundant, to actually do without that position?
So specifically, what type of jobs will be in demand next year?
So, as you know, Morgan McKinley recruits right across the professional sphere. So if I started accountancy and finance, a newly qualified accountant, and this isn't new, but within the big four and top 10 firms, still very much in high demand. Senior accountants, tax professionals, always in high demand. But as the global tax landscape is continuing to change, they'll continue to be in very high demand. And then everything is data-led, so FP&A, financial planning analysis managers, and finance business partners, very much in demand. The other big trend for 2024 we've already started to see is in ESG reporting. It's going to cover and transfers across lots of areas. But obviously within the accounting space, there will be more of an onus on the accountants to be versant in ESG reporting, and so we're expecting to see strong demand for that as well. Within the banking and financial services, and this would typically follow a lot of what's happening globally in the trends. So climate change, as you know, is a big factor. We've seen it with all the news bulletins and all the flooding that's happening. That leads to demand for risk specialists, claims managers, insurance underwriters, insurance commercial brokers, and we have already seen a growth in demand for those professionals, and we expect that to continue into next year. Auto enrolment is coming down the track next year, and we've already seen demand for pension administrators continue to rise, and we expect that to continue. And Treasury is a big area, and Ireland has positioned itself well as a Treasury hub. So Treasury managers, Treasury analysts, again, we expect those to be in demand. Technology isn't going away. I mean, even though it's had a little bit of a blip with the big tech, cybersecurity is the big space for 2024. So cybersecurity engineers, very much in demand. Infrastructure engineers, QA, cloud infrastructure engineers, as we are moving things to cloud.
Southeast Radio's Business Matters with Karl Fitzpatrick.